Matt, what stood out for you? Why the disappointment from Oracle?
Yeah, I think there's a couple of things going on here. One is that they massively ramped their capital expenditure outlook for the year, so now looking for $50 billion of spend. That's $15 billion higher than the early estimate. So,
$15 billion higher than the earlier estimates.
So, like, kind of a more than 40% increase. And I think, in a market where everybody was already kind of getting a bit concerned about how much some of these big tech companies are spending on infrastructure, and that the revenue growth is strong but it's not accelerating, that there's a mismatch between the timing and scale of the investments and when that return is going to come through. And I think particularly with Oracle, so much of their kind of forward revenue opportunity and revenue pipeline is tied to OpenAI, plus a few others. It's kind of huge concentration of risk around this kind of big transition. So I think that spending increase, combined with their big debt load, over $100 billion of debt, cash flow negative for the quarter to the tune of $10 billion. In the short term, the numbers look ugly, and investors are being kind of sold a promise essentially, and not so much delivery yet, certainly in terms of cash flow generation.
More than $100 billion worth of debt, cash flow negative by $10 billion US dollars. So what's the turnaround story for Oracle? When do you and the team expect that gap to close in terms of revenues and the spend on CapEx, if indeed it does?
Yeah, I mean, I think maybe kind of second half of next year, maybe into 2027. I think, as we spoke yesterday, for me, it's about enterprises moving from testing AI to investing in it at scale. And I think we're not seeing too many companies at that point, and I think more of them will get to that point during 2026, and that then flows through in the shape of extra demand for OpenAI, extra demand for Oracle, more revenue. So I think that's the kind of the big thing we're looking for. I think in the near term, Oracle is on a mission to kind of soothe investors' concerns about the leverage exposure, the commitments they're making, not just in terms of data center build out, but the leases on property they're taking out. They said yesterday that they're committed to an investment grade rating. I think they're going to have to do a good job on the post-results roadshow to kind of convince investors that they're kind of managing all these competing demands on the business and that cash flow, so that nothing spirals out of control.